This is Chris Keene from A Keen Point of View, and this is Currency Watch. Most of the majors had a very volatile day of trading today, as most participants expected a concrete plan out of the ECB. This plan did not materialize, and basically the ECB said that they would like to do a bond purchase program in the future or use other unconventional measures, but they didn't detail a plan or a course of action that would implement a plan in the near term. And there's still strong resistance by the Bundesbank and Merkel to allowing Eurobonds in the near future. So this left most of the majors moving up aggressively after the announcement that the BOE and ECB left interest rates unchanged, moving up to strong resistance level. And then during the press conference with Draghi, we had a strong push back towards the towards two support levels, and for many pairs past recent support levels to test new lows for the week. Heading into tomorrow, we have the FOMC report where expectations are for a creation of 100,000 jobs. If we get a better than expected number, we could see an increase. We could see strength in the dollar. If it's weaker, we could see weakness in the dollar, with expectations back on the table of strong QEE in the near future. As with non-farm payroll, you have to be careful because quite often the trend, the market will do the exact opposite than what you expect after the release of data, and so it's best to wait 5, maybe even 15 minutes before you enter any trades. Now let's look at three pairs real quick that are interesting in positions. The Euro USD, as you can see, moved up to 124 and then broke through 122.20. Depending on the data they release tomorrow, if the number is disappointing and quantitative easing comes back, we could easily retrace all the losses we had today and move back up to the 124 level. If the number is greater than expected, and we see that the quantitative easing in the near-term future has dissipated, we could see it move back to the year-to-date lows in the 120.40 area. In the Great Britain Pound USD, you can see the cross is moving right here on trendline resistance. So a break of this trend line, if it does happen in Asia or Europe, we could see it move back down towards the 154.60 level, but we'll probably get a bounce here. But as with the euro, depending on the data, we could easily push back up towards this 0.382 level around 156.60. But if the data if the data is stronger than expected from the non-farm payroll, we could move towards 154, and then ultimately in the near-term future down to the 152.75 level. The last pair we're going to look at is the Aussie USD, because similar to the USD CAD, as we've been talking about all week, the pair has been in a channel rising, and right now the cross is going to right now, the pair is rising. Right now, if the pair is at 104.60, as long as the pair remains above this level, we'll probably just move sideways in Asia. But if we get with the non-farm payroll, depending once again, if it's a disappointing number, we could easily get a move back down to the 103.20. If it's better than expecting, we can get a move back up to 105.50. This is Chris Keene, and this is A Keen Point of View. Everybody keep their eyes out for non-farm payroll and keep your trades keen.